In 2008, millions of Americans watched their entire net worth evaporate in a matter of weeks. Stock portfolios cut in half, real estate values in free fall, retirement accounts wiped out, and the scary part, most of those people thought they were protected. They had diversified portfolios. They had savings. They had what financial advisors told them was a balanced approach. But when the crash hit, balance meant nothing. Here's what nobody tells you before a collapse happens. Not all assets bleed equally. Some assets get destroyed, some survive. And a rare few, they actually thrive when economies fall apart. Today, I'm breaking down the 5 assets that have historically protected wealth during economic collapses, and I'm going to show you exactly what loses everything, so you never get caught off guard. Let's get into it. Asset number 1, gold. Gold has been a store of value for over 5,000 years, and there's a very specific reason it holds up when paper money doesn't. During the Weimar Republic hyperinflation of the 1920s, the German mark became so worthless that people were burning it for heat. But those who held gold, they preserved their purchasing power almost entirely. During the 2008 financial crisis, while the S&P 500 dropped roughly 57%, gold actually rose about 25% from late 2007 to early 2009. It's not a get-rich-quick asset. It's a don't-get-wiped-out asset. Gold doesn't pay dividends. It doesn't generate cash flow. But when trust in governments and financial systems collapses, gold becomes the universal language of value. Physical gold, coins, bars, is the most resilient form. ETFs work too, but they carry counterparty risk in a true systemic collapse. Asset number 2, real estate, but only the right kind. Now, I know what you're thinking. Real estate crashed in 2008, and you're right. Certain real estate did. Overpriced suburban housing, speculative flips, commercial real estate tied to dying industries, all of that got crushed. But productive real estate, specifically farmland and rental properties in high-demand areas, has consistently held its value through economic downturns. Farmland, in particular, is extraordinary. According to USDA data, U.S. farmland values have never posted a multi-year decline. Not during the Great Depression, not during 2008. People always need food. Farmland produces real tangible output regardless of what the stock market is doing. If you can't afford farmland directly, REITs focused on agricultural land are an accessible alternative. Asset number 3, commodities and hard resources. Oil, copper, timber, food supplies, these are the backbone of civilization. When economies destabilize, supply chains get disrupted, and the physical stuff that keeps the world running becomes extraordinarily valuable. Look at Venezuela's economic collapse starting around 2013. The bolivar became virtually worthless, but those with access to physical commodities, fuel, food, basic materials, had real bargaining power. Commodity ETFs and futures are one way to gain exposure, but physical storable commodities, things like non-perishable food supplies and energy resources, provide a direct hedge. This isn't just an investment strategy, it's a survival strategy with financial upside. Asset number 4. Foreign currencies and assets in stable economies. When your home country's economy collapses, the most powerful thing you can have is exposure to somewhere that isn't collapsing. During Argentina's repeated financial crisis, citizens who held US dollars preserved wealth that peso holders lost entirely. The US dollar, Swiss franc, and Singapore dollar have historically been considered safe haven currencies. Holding a portion of your assets in foreign currency accounts, international index funds, or even property in politically stable countries creates a geographic diversification that purely domestic investors simply don't have. This is what wealthy families and institutions have done for generations. They don't keep all their eggs in one country's basket. Asset number 5, skills, businesses, and cash-flowing income streams. This one surprises people, but hear me out. During the Great Depression, the people who fared best weren't necessarily those with the most savings. They were tradespeople, farmers, doctors, and small business owners who provided essential services. A skill that solves a real human problem is recession-proof by nature. Plumbers still work during depressions. Electricians still get paid. Essential service businesses, food, healthcare, repair, logistics, generate cash flow even when luxury industries collapse completely. In the modern context, this extends to digital skills and online income streams. A business that generates consistent, essential income is arguably the most powerful asset on this list because it adapts. Now, what loses everything? Highly leveraged assets collapse first and hardest. When credit dries up, anything bought on borrowed money in speculative real estate, margin-traded stocks, crypto positions with leverage gets liquidated rapidly. Speculative growth stocks with no earnings, meme stocks, and illiquid alternative investments also tend to get wiped. But the most dangerous asset in a collapse is actually cash held in a failing currency. If your economy is experiencing hyperinflation, like Zimbabwe in 2008, where inflation hit 89.7 sextillion% annually, holding that country's cash is the fastest path to zero. Cash is only king when the currency it's denominated in remains stable. Here's the big picture. Economic collapses aren't just historical events. They are recurring features of the global financial system. The 1920s, the 1970s stagflation, 1997 Asian financial crisis, 2008 COVID-19 market crash. These aren't anomalies. They're part of the cycle. The people who protect themselves aren't the ones who predicted the exact timing. They're the ones who built resilient, diversified positions before the crisis arrived. Gold, productive real estate, hard commodities, international diversification, and income-generating skills. These 5 categories have stood the test of time, crisis after crisis, century after century.